Assalamu alaikum, brothers and sisters. I hope you're having a great day. Welcome back to another video. It's that time again where we look at my portfolio just to kind of see what changes I've made in this month, how things are going. I like to do this because I just want to be transparent enough to let you guys know. I want to share my portfolio when things are going well and when things are not going well. If I make any buys, any sales, what my opinions are, and so on. So I'm just doing this to be transparent. So I'm not doing this to show off or anything like that. Like I've always said to you, I have a regular job and every penny that I put into this portfolio comes from my salary. I try to, every single month, I try to add at least £1,000 into this portfolio. And some days, some months I put more, some months I put less. But give or take, but I've been basically putting at least a minimum of 1,000 every single month since I've started this portfolio in 2020. So inshallah, and I'm going to continue doing this. We've got a new ISA account coming up soon. I'll talk about that. So generally, I'm going to talk about the sales, any buys, any sales, any dividends have been paid in this month. I'm going to talk about the plan for my ISA account and just generally plan for going forward what's going to happen. So the first thing I'm going to talk about generally is the market. This week seems to be slightly better than the last 2 weeks, 3 weeks. A lot of these companies are up. And I think it's a lot to do with the fact that some of them have had their earnings reports. So for example, MasterCard, Visa, Google, for example, Microsoft, Apple, they have some amazing earnings reports. Even Amazon has some crazy numbers. Facebook is the worst out of all of them, I think. So at some point, I think it was yesterday or the day before, it was down like 25%. So yeah, the overall markets are not bad at the moment. But again, remember, some days is all green, some days are all red. I think yesterday was actually a red day for quite a lot. There we go. So Amazon was down 7%, almost 8% yesterday. Google was down about 3%, Microsoft, and so on. I like to talk about these companies mainly because if you think about it, they are weighted almost, I think in the S&P 500, they're weighted heavily on the S&P 500. So that when they move, the market moves with them. And I have actually a video coming up, inshallah, soon talking about Amazon, Facebook, Google, Microsoft, and Apple, and whether all of them are Sharia compliant or not, and what I think about them and so on. I own Microsoft, used to own Apple. I've never owned Google, Facebook, and Amazon. So I'm going to do a video just comparing all of them from halalness side of things, and obviously from business perspective as well, inshallah. So I'm planning it now. If you like this kind of content, please just like, this video, like all the videos that are in there, just watch them and let me know if you have any questions. Subscribe to the channel. All I'm doing here is just being transparent, sharing my, my journey with you guys. I'm not a financial expert. Some days I don't know what I'm doing, but alhamdulillah, I just want to share my progress in the stock market and let you guys know what I'm doing and just be transparent. But if you ever have a question, just let me know. Some days I might be able to answer your question. Some days I might not be able to, but I'll do the research and find out for you, inshallah. Right, let's get to the overall buys and sales first. So I'm going to start with the sales first here. MediFirst is a company that I had for I think about 2 months. I like the business model. They are in the kind of exercise, health, eating kind of company. They're not exercise, they're in terms of healthy eating. And they encourage a lot of people basically to eat healthy, and they have a lot of products that they sell. They have a plan and all that stuff. They're in the right industry, but I think the issue with this company is super volatile. Really, like almost some days it moves like 2-3%. When the markets are like 1% or like 0.5% down or up, it moves like 3-4% up, 3-4% down. So it was just too volatile for my portfolio, and I don't want to do that. I've got high growth companies in my portfolio, so adding this one, although I think it's got massive upside, I don't really like the fact that it's too volatile. Coca-Cola is another company I've bought, I think about 10 something shares for £514 pounds. And what happened basically is I bought it when it was obviously trading high, I thought it might go down and just maybe I can buy a couple of more shares. So if we go back here, Coca-Cola, for example, is right now is $61 per share. When I bought it, it was about 59 or whatever. I was hoping that would go down with the rest of the market, maybe to about 50, and then I can pick up more shares of this company. It hasn't done that. It's overvalued at the moment. So I just feel like maybe that money will be spent somewhere else instead of just keeping it here for now, and then it's overvalued, and then later on if it tanks, then I'm going to lose a lot of money, because this is the kind of company that actually doesn't even move when the markets, they're not volatile. They're not as volatile as this company. So if you buy it low and you get that dividend, that's the very good combination, and that's what I'm looking for. So if it goes down maybe another 10 to 15% in the next, I don't know, months or whatever, then I will probably get back into it. But overall, so I made sales of £883 in total. I've spent 2,000 something. So you can see I just paid a little bit more than the usual 1,000 I normally buy. Now I bought almost 1.5 shares of Johnson & Johnson a while back when it was down, and after the earnings I think it did really good and it went up, but overall I paid about £200 for the 1.5 shares. Dividends is 2.45, almost 2.5% of dividends, and you get about £2.65 for every basically every share that you own of this company. So overall total, I've got £4.21. The reason I'm adding to this company is I love this company. I think I own now 20 something shares, and I'm going to keep buying this every couple of months. I might buy 2 or 3 more shares. My plan is to own at least 100 shares of this business. Okay, so I'm just going to keep buying, whether it's up or down, I'm going to keep buying that. Next one is Stanley Black & Decker. This is new to my portfolio. I bought 5 shares for £672. They pay dividends of 1.68, and then it's about, that works out basically about £1.98. And overall, I will be gaining almost £10 by just adding this to my portfolio. And it's quite a bit down at the moment, a little bit more volatile than I actually expected. But obviously because the industrials are normally very cyclical, so they go up about 1%, 2% every day here and there. So they're a little bit volatile because I've got Cummins that's quite volatile in the same sort of industry, in the industrial sector, and so I wasn't expecting it to be that volatile. But that it is what it is. I'm just going to add to it. Is undervalued at the moment, so I'm going to add to it. PPG, I had it in my portfolio for a very long time. It went down in the last few months. It went down almost 10%. So for that reason, I decided to add to it. Okay, right now I think I've got about 5 shares overall of this business, so I'm going to keep that. I paid about £225 for that. Their dividend is not that huge, but it's, it's enough. And at the moment, I'm getting £1.47 pence for that, for the 2 shares that I just bought, and so per share, and total I'm getting almost £3 for this. So that's basically added to my overall. And then you've got VFC. Again, this company is really undervalued at the moment. It's very much down, so I'm adding to it. I like their dividend, I like their products. This is the timber company that owns a lot of North Face and Vans and all that products. So I'm definitely going to keep buying this as far as in the next few weeks, and maybe get about 20 to 25 shares and just completely forget about it. I think they're dividend aristocrats, so that means they've been paying or increasing their dividends almost to 25 years. So I'm going to keep adding to this, and that's it. 3M is another one. I bought 4 shares in this month, paid about over £500. It adds up about 14, almost £15 of dividends to my overall portfolio. I absolutely love this business. It's down quite a bit at the moment. Last year didn't do anything, so I will be buying this and Johnson & Johnson. I'm gonna keep buying them almost every single month. So every single month when we do these things, I'm sure you will see me buying 3M, and unless the stock market basically goes crazy and goes under, I don't know, another 20-30%. Unilever is a very similar situation, but this one was down so much the other day because they were trying to acquire another company, and that didn't go through, and because of that it tanked. So I bought 5 shares at that point, and then 2 days later it went back and above where it was. So I was quite happy actually, the timing of that. That adds about £7, and that 5 shares adds £7 to my portfolio. Then it was one of my favorite companies in the world, which is very much undervalued at the moment, and that's Microsoft. I just bought that after the last video. I've talked about this. So I bought 1 share for £230. That adds about £1.43 of dividends to my portfolio. And then I bought 1.4 shares of Adobe and 1.6 shares of Salesforce. Again, I will be buying bits of these 2 companies in the next couple of months. I'll show you in a second that I was super undervalued at the moment in both of them. And honestly, I've always spoken about these companies and how much I love them and how much I actually believe in their future. They are the future of when it comes to, software as a service, subscription kind of based companies, okay? And for that reason, I'm going to keep them in my portfolio and see how it goes. Right, so that's all the sales and buys if you think about it, and that's over £2,000 I've spent, but £883 of that came from the sales that I've made. I don't normally do a lot of sales, but here and there I might get rid of a company or whatever if something is overvalued. So kind of manage. Remember, what we're doing is really like we're doing portfolio management, and you have to do what's good for your portfolio. So when I got rid of these 2 companies, one was too expensive and the other one was too volatile. So I just didn't want that in my portfolio, so I just got rid of it. Let me just quickly run through some of the stocks, and then I will show you what's undervalued, what is overvalued at the moment. So if we go back to Trading 212, which is my main account, you can see in here, I've got 3M, I've got Adobe and so on. 3M still down 4%, which is absolutely fine. Adobe down, I've got 3.4 shares, and it's down about 12%. Air products and chemicals, another undervalued at the moment, but it's 2%, almost 3% up. It was up at some point almost to 5%, 6%, but that's absolutely fine for now. I'm not going to add to it maybe in the next week or 2, but I will probably buy a bit more. If it carries on this, if it stays around 280-ish, then I might actually be buying in maybe the next month. Amgen, another company, I don't know if I'm going to add to it at the moment. I might just wait. It's just up a little bit. Broadcom, I absolutely love this business. I think it's too expensive for me at the moment, but I'm just waiting. Maybe if the price drops maybe about less than 500, then I might start looking into it. You never know, but I really love the business. I love their dividend and their dividend growth. Cummins is another company, still undervalued. But I think I bought this basically stock when it was really overvalued. And this is what happens. Now it's kind of undervalued territory. If the price goes down below 215, then I'm definitely going to buy it. But the issue is because I bought it hard when it was too expensive, I'm still down about 3%, which is absolutely fine. So I'm going to, the more I buy it, the more basically the average goes down. So that should be fine. Home Depot, I haven't touched this business for a long time. I think because of the overall, I think in this month is down quite a bit. So I think it might be sooner or later, it might actually, so I think, yeah, 10% down just this month. So I might sooner or later, it might just come back to a buying territory and I might add to it. I need to buy another 3 shares to make it 10 shares and just completely forgot about it after that. Like I said, Johnson & Johnson, I love this business, 26. I've got 26, 27 shares almost. KLA is again another great company, fair valued I think at the moment, but I'm not adding to it yet. Lowe's is another company that I really want to add to. It's down about 8% for this month. For the last 3 months is down not much actually, and for the year it's up almost to 40%. So for that reason I'm going to wait for a bit. Mastercard absolutely had a monster earnings report. Love this business. It's up about 5% just this month, and I'm up about almost 18%. I love this business. I'm going to keep it there. Medtronics, really undervalued. I'm definitely adding to it. Here and there I'm going to buy a couple of shares. My plan is basically to get about another 10 to 15 shares of this business. Merck, I haven't added to it. They had their report yesterday. I haven't gone through it completely, but they were down yesterday. So I'm going to do that next 24 hours and just look at what they reported. I know everything was good. I think their forecasts were lower, I think, but I'm going to check what's happening with that. I haven't had the chance to look at it. They just reported yesterday. Microsoft, one of my favorite. Again, this month, I think it's down almost 10% as well. So I bought already 1 share. So I'm not adding to it maybe in the next couple of weeks, but we'll see. Pfizer, I have not touched this. It's really overvalued at the moment, so I'm going to keep where it is. My plan is to buy it if it goes below 40, but right now it's 53, so I don't know. PPG, I've recently bought 2 shares. Procter & Gamble, I haven't touched it. Again, it's still overvalued. Qualcomm had absolutely amazing report, like earnings report. Absolutely brilliant. I went through the whole thing. Absolutely brilliant. They bought back shares. They paid a lot of dividend. They actually got rid of some debt. This company, their balance sheet is absolutely clean. I need to buy more of this business. So I need to plan what my strategy is with this. So the next couple of months, and see what happens. Rio Tinto, I have not touched this business for a long time. I'm not buying more. I'm going to keep it. I don't know if their dividend is safe. I'm here for the dividends, but there's not much of a growth. So if I believe this company is not going to give me that growth, and I'm worried about the dividend as well, the dividend cut somehow, okay, then I might get rid of it and buy something else. Put this money to over £1,000. I can put that to another company, hopefully. Salesforce, we've talked about already. I've got 6.6 shares in here, but I've also got 5 shares in Freetrade. And you know me, I like to be transparent. And as you can see, this is a screenshot of my portfolio in Freetrade. As you can see, I've got TSMC. I've got 13 shares, 13.7 shares of that, £1,200 worth. And it's up about just 1.5% at the moment, which is absolutely fine. It had a monster run after the earnings report, but it came back down again because of the overall market is down. But again, I'm long this business. I wish I could buy it, on my ISA account. I'm worried. I don't know what's going to happen in the future. So I would love to have this in my ISA account. So at least that's protected, and I don't have to pay a lot of taxes if it goes up massively. Salesforce, like I was saying, I've got 5 shares here, and I've got half a share on CrowdStrike. And overall, I think this portfolio is about over just £2,000 overall. So that's the only 3 stocks that I have in Freetrade account. Right, the next one is Stanley Decker. We've already talked about it. Tesla, I still own it. I keep thinking I should sell this, I should sell this, but then I just left it for now. I think I might, if it goes again to 1200, I might get rid of it. I don't know, or keep it. I don't know what I'm going to do with Tesla. I love the business, but it's just too overvalued at the moment for me. Unilever, I've got 40 shares. Union Pacific, again, I haven't added to this company yet lately because it's overvalued. I feel like it's overvalued at the moment. If it goes below 215, 220-ish, maybe I might get a couple of more shares just to round it up, maybe to 15 or 20. And then VF, I've got 20 shares so far. I'm down about 7%. And Visa had an amazing report as well, an earnings report. Now it's up about 8%. At some point I was down 8%, but now it's up 8%, which is amazing. And Waste Management had also very good quarter, and it's down quite a bit. So as you can see here, it's down 10% just this month, and then 8% for the last 3 months. But when you look at the year, it's up about 30%. So ideally, I would like it to be, I bought it when it was $112 per share. So if it goes maybe 130-ish, I will buy more. Even 140s, I think I might start buying a couple of more shares, because I like the business, but I don't think it's fairly valued at the moment, or undervalued, anything like that. So that's generally my overall portfolio. The other thing I want to quickly share with you guys is the ISA account. So just the ISA allowance. And as you can see here, basically ISA account is tax haven. Like I get 20,000 allowance every single year, and I can invest £20,000 and I don't get tax at all. So I'm getting my new ISA 20,000, fresh 20,000, and on the 6th of April, I think the 5th or the 6th. Oh, there you go, 6th at the end of April. And before that, I've got about £5,300 to spend. I think I will definitely do that before then. Overall, right now it's about 73. So my plan is, and always been, to max my ISA account every single year. Okay, so from April to April, put £20,000 into the stock market every single month, dollar cost average, and then forget about it. And that's my plan, inshallah. I'm going to keep doing this for a long time, so that's the long-term plan. So that's just generally overall my portfolio. I will share the link if you want to have a look at it. Again, like I've always said to you, I'm not a financial advisor, but just to have a look at this, some of the companies I invested in, why I've invested. I've always talked about it. I've done videos on more or less every single stock in here, so you can check that out. The final thing I want to talk about is the passive income. So this isn't only the dividend paying companies. So as you can see here in dollars, I've got $53,599 in there, and yesterday was down almost 2%. But the annual income is what I want to talk about, and that's $1,259 for basically a yearly. And yield in terms of the dividend yield is up right now is about 2.3. My plan, inshallah, in the long run is to get to about 3%, and the yield on cost is right now 2.6, which is quite good as well. Dividend safety overall, about 11% of my portfolio, the companies that I have, is actually unsafe. 89 of them is actually safe. And then dividend growth for the last years for the companies that I own, about 11%. So what this means is the dividends will grow about 11% every single year, which is really amazing. And then generally, if I show you the diversification side of things, I'm heavy on tech, and I've always been, and I think always will be, healthcare, then industrials, materials, consumer staples, and consumer discretionary. Now these two here, especially consumer staples, I'm going to boost this one up, especially consumer staples, because of the interest rates going up and all of that. These consumer stable stocks do have a, they can increase their prices without basically worrying about anything, basically. So Procter & Gamble's and these companies can easily increase their without having to worry about, whereas some healthcare companies might struggle with that kind of thing. So I'm going to basically add a couple of more either companies or buy more shares of the consumer staples companies that I own. But right now the issue is a lot of them are overvalued, because what's been happening is when tech is on sale, who's benefiting from that is basically the consumer staples, the Procter & Gamble's, the Coca-Cola's and the Kimberly-Clark's and Clorox and all of these businesses. They actually go up a lot more than when the tech companies are actually down. As you can see yesterday, everything else was down, and these companies were actually slightly up, some of them. Okay, so that's basically what tends to happen. So generally, overall, the plan is, and in the long run, just to add a couple of more to these stocks. Now, final thing I want to talk about, this video is longer than I wanted, but final thing I want to talk about is on Morningstar. I put my entire portfolio. I don't think it's up to date in terms of stock wise, because you can see Activision Blizzard is still in there. But what I wanted to share with you is look at the top companies. Taiwan Semiconductor and Salesforce are both of them 5 stars. That means it's the cheapest they can be right now. Okay, then you've got Medtronic's 4 stars, Unilever's 4 stars, 3M 4 stars. 3M not long ago was about 2 stars. Right now it's 3 stars. Microsoft 4 stars for Microsoft. Merck is the same. Procter & Chemicals, Adobe. Okay, and then you've got loads of 3 stars here. 3 stars is basically fairly valued. 5 stars is really cheap, and 4 stars is definitely undervalued. Okay, and then 1 and 2, that means basically this means expensive, and this is really overvalued. So Procter & Gamble, Home Depot, PPG, all of them are way overvalued at the moment according to Morningstar. One thing I've always said to you guys I love about Morningstar is the fact that they have they use basically their valuations is actually quite good. It gives you that kind of, the margin of safety, if you like. So if I were to buy this company, I would actually think I can trust them, basically, okay, to actually give me that margin of safety just in case anything happens. But yeah, so that's the final thing I want to share with you guys. I've always been transparent. If you like this kind of thing, just like the videos. Let me know if you have any questions. I hope you have a great day. Assalamu alaikum. Take care.